Good morning, traders. This is Michael coming to you from GammaEdge on Monday, April 28th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model that is based on the tick index, which is just a component of buying versus selling. And we add a time component to be able to look at the overall trend in the market. So up to speed, quick reference, bolded CT, that's our instantaneous intraday cumulative tick, again, aggregated for buying versus selling. If it's from lower left to upper right with a positive slope, that indicates that buyers are in control of the overall market. Conversely, if it's upper left to lower right, then obviously sellers are in control. As we've been discussing really the past few days, we saw the bolded CT start crossing above our shortest term moving averages. Again, this is just a overall indicator of short-term moving averages. If the bolded CT is above that, that indicates buyers are in control. And we see it emerging now from our large colored ribbon, which is the red and cyan. This is our longer term indication of market participants and who is in control. So now buyers are trying to take back control of the overall market. Up here, this is new highs versus new lows. This is a breadth indicator indicating that more stocks were being accumulated or bought on the uptick versus downtick, and more stocks were being bought versus sold via the red or green line above the red line. Then our institutional indication here is filtered cumulative tick. These are filtered out by plus 1,000, minus 1,000 larger block orders. And if it's above the zero line, this indicates that institutions are obviously buying versus more selling. And then the previous day here on Thursday, we saw a significant amount of institutional buying, as well as back here on the previous day on 4/22. So again, if we want to see the market continue to the upside with price appreciation, we need to see this filtered cumulative tick stay above zero and continue with the positive slope to the upside, as well as the bolded CT. If this starts to flatten out or actually start to roll over back in towards the moving averages, we would proceed with a little bit of caution, as most likely we'll be reaching some consolidation area or a possible reversal back to the downside. But we'll watch that. As of now, we've got our 1 to 3 day move to the upside. We have our 1 to 3 day move to the upside, and now we'll be looking for a extended move into the 5 to 7 day area. Again, if we continue to stay above the moving averages and move from lower left to upper right on the bolded CT. Moving on to the SPXA, this is our cruise ship. We provided a great extensive newsletter, education why we split the SPXA and SPXP over the weekend, so make sure you check that out from GammaEdge. And so on the SPXA, this is the cruise ship. Just a short term, it is the quarterly or monthly and quarterly expiries. This is institutional positioning, so larger money. We obviously follow the SPX, which is the largest delta or notional volume of the options market. So this gives us an insight and under the hood positioning of what larger market participants are doing with their accounts, as well as their positioning longer term. We are still put dominated above and below spot price, but we do see a significant improvement in the overall structure, as denoted here by the green box below spot price. This is indicating in the money calls below spot price, and this can provide some supportive type action on pullbacks, provided that the market trend model as well as this positioning continues to improve. To the upside, we do see still in the money puts via the red negative net delta. And if you reference the net OI here, this gives you an indication of who is winning the battle, at least to the upside, as well as to the downside. But again, we continue to see improvement in the net OI, indicating out of the money call speculators continue to come into the market. And then we'd like to see spot price continue to move up. If you're a bull, obviously towards this 5,600 area that's shaded, I think that's a pretty good target. As we move up, obviously we push a significant amount of in the money puts out of the money, and we start capturing those out of the money call speculations, adding positive delta to the overall structure and market. So again, as the structure improves below us, this can provide us a floor and be supportive on many pullbacks. That first pullback area would be that 5,500 level, and then below that would be 5,450, and then obviously down here towards 5,400. So again, we'll continue to watch this day over day for the longer term position of institutions in the overall market. Moving on to the SPXP, this is what we call our cigarette boat. These are shorter dated 0 DTE weekly contracts that roll over much quicker. Obviously, this would be more as of day trading or swing trading. For market participants, again, we are call dominated, so the structure continues to improve dramatically. You'll denote obviously the green net OI above spot price, so calls are in control, as well as the green net delta here, and then indicating the green net delta below spot price. So again, this can be supportive. You'll notice the transition for all expiries. We have the all expiries turned on here is roughly 54.80. Top of transition, so we need to at least stay above that to maintain a more bullish stance. Again, that basically has that confluence with the 5,500 level, so any pullback down into this transition on all expiries would most likely be supportive for now. Again, referencing that 5,500 key important level to stay above, or at least chop around and be supportive to the upside. Again, 5,600, we'll notice that's PX to the upside, so a significant amount of call speculation up there. So if we do cross above 5,550, 5,600 would be that next logical target to the upside. Moving on to SPXP 0 DTE. We are call dominated here. Again, structure continues to improve below spot price via the positive green net deltas. These are in the money calls that can be supportive as price action stays above our transition level. Obviously, that's a key component here at GammaEdge that we want to stay above if we're bullish to stay in a more positive call dominated state. We have our drunken sailor range outlined here. Again, within this overall range, it can be choppiness as there's low exposure areas denoted by the hundreds of net OI or even single digit OIs. But the transition level, again, confluence 5490, we relate that 5500 to 5490, or even the transition level on any pullback to be supportive to get involved in the overall market. If we get below the transition level, we would change our stance to a little bit more cautious. Obviously, we'd also be watching the vol-m command intraday, indicating where market participants are positioning their speculation in mass, as well as the MTM. If the MTM starts to flatten out to roll over and we cross below transition, then obviously we look to a little bit more cautionary state and possibly a little bit more risk off, move back down towards the 5,400 level. As of now, we're not really seeing that with the overall structure and improving market trend model. This pink is our expected move for the day. Via the 93.1.68% here. We continue to watch the volatility come down. Still a little bit elevated here though. So expected move could be within this overall range. Thesis for today for me would be the upside watching 5550. If we get above 5550, we have a chance to move up towards that 5600. You also note this is COTMC, proprietary level here at GammaEdge, where out of the money calls go in the money. And historically, this has been a profit taking area or a monetization event. So I would watch the 5,600 level if we do start moving into here for some profit taking and monetization, and probably some basing into that level. To the downside, if we get below 5,500 and we start chopping around in the transition, and then we have some cautionary indications via vol-m and MTM, then most likely I'd like to see, or most likely we'd probably see some more weakness down towards 5,430 or 5,400. Again, not really expecting that. Drunken sailor range, that top there at 5,550 is going to be a key component to get over for the upside. So moving on to the delta balance, we'll just run through this quickly. Obviously, this is positioning above and below spot price by market participants. If we're call dominated, we'll be above zero. If you're put dominated, you'll be below zero. So we continue to see improvements on all components of the delta balance, as well as the delta balance itself, which is the blue line, obviously staying above zero, indicating call speculators are in control. And then this is our projected on out in time, basically our crystal ball. We do see a little quick drop on the 30th, most likely some monetization into the month profit taking, but then we see a nice recovery on out in time with the delta balance, indicating call speculators will still be in control above and below spot price. Moving on to the SPY, we talked about that. It was actually improving rapidly ahead of the SPXP, and again, maintaining above zero. So all systems go on that as long as we stay above zero. Delta balance pegged at 1, indicating call speculators are in full control above and below spot price. Moving on to the Qs. Again, it had improved rapidly ahead of SPY and SPXP, which we spoke about. And again, everything staying above zero, delta bounce staying pegged at 1 on out in time projected indicates that the Qs are call dominated and call speculators are maintaining overall control of that ETF. GEX ratio, we talk about this. This is basically a improved put call ratio, but we add gamma, which is a time component. As spot price moves up, we do capture those positive deltas, those out of the money calls that go in the money. So your GEX ratio will continue to rise. Obviously, the component though, if spot price continues to move up, you want to see the GEX ratio continue to move up, indicating that out of the money call speculation is coming in and overriding put speculation. Now, if we see spot price continue to move up, and then that we see the GEX ratio start to flatten out or turn down, that would be an indication that we have possible weakness coming in as out of the money call speculation has dried up above spot price. And then overall put speculation could be increasing to the downside. But as of now, spot price is rising, GEX ratio is rising, out of the money call speculation coming in and swamping the put speculation. So we continue to be in a positive bullish state on the GEX ratio. Net stat command, I forced it at 55.17 this morning. We're roughly going to open around those levels. To the downside, we've already discussed 5,500, key component here for the third order Greeks, Charm, Gamma, and Vanna, as well as that net delta at 53.50 in the money calls. You see this integral is significantly higher than right-hand plane. Obviously, right-hand plane strike 5,800. Way out of the money at the moment due to the overall structure, and that's in the money puts here. So these in the money calls will continue to be supportive on any pullback as long as we stay above 5350, 5400, 5500 for the day, and then those key third order Greeks that we'll be watching to the downside and to the upside. Again, in the money call dominated to the downside at the moment. So moving on to our thesis for today. On the trading view chart, staying above the P-Trans zero GEX level really is going to be a key component. We talk about that here, the transition levels to stay in a more call-dominated positive gamma environment. I've denoted 5,600 to the upside. First area I want to see us get over is that 55.50, a large call strike there. If we do make it up to 55.50 and we see some stalling, we just could see some chop around between the 5,500 and 55.50. Above 55.50, I would really be looking for 5,600 as long as the MTM is maintained and the vol M is indicating positive call and centroid slope. So takeaway for today is, again, improving structure, improving market trend model, moving to the upside, staying above the transition and zero levels will be key. Moving forward, days to weeks, we have a significant amount of EPS this week for the Mag 7 stocks. So that could be news on the horizon that could drive price. But again, positive states improving through the overall structure and sentiment as well as our market trend model. So we will be looking to get involved on any pullbacks as long as these states maintain positive and bullish as well as the market trend model. So that's it for today. Thanks everybody and make it a great Monday. We'll see you later.